Bloomberg Money.
This is Bloomberg Money. Good noon, everyone. Bloomberg Money on personal finance, retirement, and wealth management. I'm Scarlett Fu here with Tom Keene. Of course, we do want to bring your attention to what's happening with SpaceX. The company began trading today after IPOing yesterday at $135. The opening trade was $150, although it's worth noting for those who were keeping track that the indicated open had been steadily declining from earlier in the day. Let's go over now to Yahaira Anand. She is our Bloomberg television correspondent, joining us from the NASDAQ in the middle of all the action. Yahaira, take us through what we've seen so far.
Well, the excitement was palpable here at the NASDAQ, Scarlett, and now SpaceX has officially begun trading. As you said, the stock opening at $155 a share above its $135 IPO price, giving investors an immediate gain of roughly 11%, though now we are higher. But that opening value does price the company at approximately an under $2 trillion market cap, instantly putting SpaceX among the most valuable companies in the world. It's more valuable than Tesla itself, another Elon Musk company, of course, but also Saudi Aramco and Meta.
Thank you so much for that context, because we talk about all the superlatives attached to this IPO. It's also going to make a lot of early investors very wealthy. Walk us through some of those names.
Exactly. I mean, you have the Peter Thiels of the world that bet early on this company and will make tens of billions of dollars. Sequoia, another early founder. And what was striking to me this morning is obviously there are a lot of skeptics on Wall Street on this name. It has an unprofitable timeline for quite some time. They have lofty ambitions of having data centers in space by 2028. But here on the floor with the investors and the bankers, they are excited because they are about to make a whole lot of money, Scarlett. So that is why, while you have the skeptics out there in this room, there was nothing but excitement, and also from the NASDAQ, which won this listing.
All right, good stuff. Yahaira, thank you so much. Yahaira Anand, Bloomberg television correspondent, joining us from the NASDAQ, where SpaceX began trading today for the first time, opening at $150 after pricing its IPO at $135 last night. Tom, Bloomberg Money.
It's Bloomberg Money. Is it a little different? I think it's a little different.
You know, we had to mix it up already.
Let's call it a special edition of Bloomberg Money. We'll get to that later with some wonderful voices for you on SpaceX and, of course, the uproar on Social Security. But this is what Bloomberg is about. The intellectual capital at the firm worldwide is extraordinary and critically eclectic, and for SpaceX, that's important. Joining us with all of his expertise, teared up at Caroline Hyde, Ed Ludlow continues with us here. Isabelle Lee is in the trenches of the retail effort. We'll speak to her. We're going back and forth with Eric Balchunas here on the ETF market, and we're thrilled to have Mandeep Singh with us with all the technology today. I don't even know where to begin. I guess I'm going to start with Ed Ludlow right now. When you look at the quote-unquote allocations, what's the gunpowder into the closing bell here on Friday?
Everyone is disappointed. Everyone is disappointed, right? Like, it's not just a matter of oversubscription on the retail side. So what Bailey and I reported is that the allocation was about 20%.
Yeah.
15 billion of the 70.
They're on their phone screaming.
And you know, Nancy Tengler of Laffer Tengler, that's more like a wealth management issue, right? But she was just on the show saying, I'm buying at the open market. I don't want to be. I'm buying at the open market. The main point here was that SpaceX and its management, specifically its management, forget the bankers. They genuinely believed that the retail investor was so important for the long term, right? That they actually understood the story way better than Wall Street does. Highly analogous with Tesla, right? That story's played out. The retail investor base is a big part of Tesla's story. Mm-hmm. But 20%, that seems low, you know? And so what do? Do you go under the mattress, get your cash, and then run and try and play the open market? I don't know, but I know that a lot of people that are trying.
A lot of people are trying, and those who can't do it may be doing it through other synthetic means. Isabelle, the ETF industry has made a lot of money creating single stock leverage products, and you've been reporting how this ETF industry has been tripping over itself to do the same with SpaceX. How many SpaceX-linked ETFs are there right now?
There are more than 20 SpaceX-linked ETF, but around a dozen are slated to launch on Monday, and they're all bummed because they wanted to launch today, Friday, like just hours after SpaceX go public. But then the exchanges were like, nope, we think it's too risky. Of course, they declined to comment, so I'm putting words into their mouth, but that's what you could speculate from them. But we have one that may launch today. I don't know what they did. They did some maneuvering, but I'm trying to get that story out, but they launched today. It's Defiance. But I want to briefly jump to Ed's point. I got a retail trader on the phone earlier, and it was around 8:30, and he said he put in an order via E-Trade on Monday, and then on the phone, he was like, oh, I got an allocation. And then just an hour ago, he said, oh, but out of the 40 shares I requested, only 11 I received.
I'm going to set up Mandeep right now, but I'm going to go back to Ed Ludlow to go to Mandeep. Sure. In your world, there's respect for people like Mandeep Singh.
Big time.
What do the fundamentalists think of all this retail action?
So when I say that SpaceX believes the retail investor knows the story better. The story is complicated, and Mandeep, in the research that you published, we were just discussing it on air, is there is the very distant future where humans live on Mars. I know, Tom. Humans live. I know. But just give me 5 seconds, I'll go to Mandeep. I promise. Humans live on Mars. Then there is the present day where this company is making a really big move to rent compute capacity to others. It's neo-cloud business. And then the in-between is orbital data center.
We're going to talk to Jim Chanos about that. Your thoughts here on the roulette wheel that Mr. Musk faces is a trillionaire.
I mean, this reminds me of Palantir. Palantir is a stock that traded way above every software company because retail just believed in the company, and it was high growth for a while. It still is a fairly high-growing company. But when I compare SpaceX valuation at $2 trillion to Meta at $1.5 trillion, a company with 10 times more revenue. Meta's revenue run rate is $200 billion. SpaceX is $18 billion. How can SpaceX be 30% higher than Meta? And it just, to me, this is dislocated.
Quickly, or Scarlett, just a moonshot up from 150 up to a higher level. We've pulled back just a bit, finally up 18%. Finally, a little bit of pre-trading stability.
All right, well, we'll see how it all shakes out. Mandeep, there are 23 banks involved in this IPO, so Wall Street has a lot riding on the success of this offering. What do the sell-side analysts, brokers, financial advisors likely see and wish they could say out loud, but can't because of their bank's relationship with the company?
I mean, it has to be valuation. Like, the Meta example to me is prime, a company that generates, almost $100 billion in free cash flow. Yes, it's investing a lot in CapEx right now, which is why the multiple is compressed. But it's got $200 billion in real revenue. It's growing 30%, very sticky user base. SpaceX has a lot to prove. And yes, they signed those 2 deals, but that's not going to be enough for the
I got to squeeze this in. You're going out of Middletown in the Gulf Stream this afternoon, back to San Francisco. How is your San Francisco, how has your Silicon Valley changed with this transaction?
Well, so there's a big misunderstanding that the 4,000 millionaires at SpaceX that were minted will sort of retire to the beach, go down to Newport Beach, and sling Mai Tais. No. There's been lots of liquidity events at SpaceX. It is a leader in this new era of private companies staying private longer, but doing secondaries. So what you'll see in Silicon Valley at large is that those 4,000 are more likely to start their own company, or they're more likely to become venture capitalists. That is a big ripple effect. You see the same thing with OpenAI and Anthropic and AI too.
This has been wonderful. Fabulous to have all 3 of you. Mandeep Singh, Isabelle Lee, and Ed Ludlow. Safe travels as you can. Coming up, Ed Ludlow mentions the Neo Cloud. Jim Chanos, I'll cut to the chase. He is scathing. He calls this IPO hopes and dreams. Stay with us, a special edition of Bloomberg Money. Welcome back to Bloomberg Money. I'm Tom Keene with Scarlet Fu. It is a very special edition here. Yes, on your personal finance, on your retirement. Scarlet, did you get your leveraged ETF set up for SpaceX?
You know I can't do that. I am only passive.
You're very passive.
Passive
okay.
investor
Nobody's going to
only.
be passive with SpaceX this morning. We're seeing the pricing here with some stability, or up 21% off the 150 level. This is indeed an honor. Joining us now, he's been extremely active on Global Wall Street in the last 4 or 5 days. James Chanos is with Chanos and Company, definitive on the street of a cautious view. Jim Chanos, honored to have you here. Let me just cut to the chase. What is a distinctive feature that makes SpaceX remind you of Enron?
Well, I don't know that it reminds me of Enron, Tom, but it reminds me of the Enron time frame. How's that? In that I've always said that Wall Street has a printing press too, just like the Fed. It just takes a while to get going. And one of the things that I think SpaceX is ushering in 2026 is massive equity issuance. And historically, without a doubt, in the 20th and 21st century, anytime you have seen massive IPOs and secondaries relative to the size of the market or the economy, investors generally have been advised to be a little more cautious or reduce their risk. So the 1999, 2000, 2021, for the first half of that year, during the meme stock and SPAC craze, we are now going to break records in 2026 for IPOs and secondaries. Mm-hmm. And SpaceX, of course, is the granddaddy, kicking it all off in a big way. But we're going to see OpenAI and Anthropic and probably some others. So we're going to shatter records. And so it's telling you that right now supply is meeting demand, which we haven't seen, by the way, in 23, 24, and 25. But we're seeing it now in 26.
I look, Jim Chanos, at this, and we've got a wonderful amount of time here with Mr. Chanos. So much to talk about. Scarlett's got some themes. I have some themes as well. Ed Ludlow fronted me. Did you see how he did that?
Yeah.
Ed Ludlow just stole my thunder
He
here.
needed to do it.
Chanos is thinking about the Neo Cloud. This is the team here. The New York Times article of a day or so ago. Is SpaceX worth $1.8 gazillion? XAI seems to be suddenly changing its business model from developing models like Grok to basically becoming an Ed Ludlow neocloud. The entire valuation rests on XAI's progress. The neocloud strategy is a commodity business that is valued far lower on the public markets. Jim Chanos to Isaac and the crew over at the New York Times. They're talking innovation, but you're predicting they'll go safe?
Well, what's really interesting, Tom, is that about a week, 10 days ago, the vast driver for the SpaceX TAM in their prospectus was the enterprise solutions for XAI, basically Grok, what the models produce, right, the software. And instead, they basically did a 180 pivot and said, we are going to lease out our capacity to Anthropic and Google. And that's the neocloud model, right? That's you're an equipment lessor. And that is a much lower valued business in the marketplace than being a model company or a hyperscaler. And we've been following data centers for a long, long time. And basically, it's a finance business, right? You're buying the chips from NVIDIA or somebody else, and then you're leasing them out to Anthropic or it's a rate of return business. It's not a super high-tech business. Yet 22 plus trillion of the 29.5 trillion of SpaceX TAM in their prospectus was based on that business. And it just struck me as very, very odd that right before the IPO, they would pivot to a much lower margin and lower valuation business than the hopes and dreams, which you guys have mentioned, I've mentioned, based on producing these wonderful AI agentic software products from Grok. And it's one of many head scratchers about this deal.
At what point does financial reality, the kinds of things you were just talking about, breaking down the numbers, become more important and matter more than the storytelling, the hopes and dreams part of it? Because that's what Elon Musk excels at, and that's what people are buying in on.
So the question is does the Elon premium, is it Elon premium times 2 or Elon premium divided by 2? I think that's really the question here, because there are people who believe in Elon and have bid up Tesla accordingly, to well beyond where I think most fundamental analysts think it's worth because of Optimus robots and autonomous driving and all that good stuff. And now you have another Elon hopes and dreams company with an even bigger valuation. And so does that double the value, or does it basically say, okay, well, I'm going to pick one? Because neither of them, let's face it, are being valued on their operations. SpaceX is, I believe, depending on what I heard in the green room, is probably now at about 110 times revenues. And just history tells us you just never really make much money buying equities at over 100 times revenues.
Yeah. Well, you, as we know, are inherently skeptical. Your company name's Kynikos, a skeptic. You're not being a bull on SpaceX or Tesla or Elon Musk completely tracks. Is there anything in the SpaceX financials or Musk's management of the company that does impress you that you can say good job on?
Look, I think Starlink's a real business. We can look at their businesses. Again, we have to go on what's in the prospectus. Starlink's a real business. It's growing. It will probably continue to grow, although its growth is slowing. The launch business is still losing money after 22 years. And I'd be remiss from my fellow glass half empty participants if I didn't point out that the rocket that all of this depends upon, Starship, still has not achieved Earth orbit in 12 missions, right? And half of those ended up with some sort of mishap. So there's a lot riding on all of that. I think Starlink is a real business. It's worth a couple $100 billion. But the real hopes and dreams here is on XAI, which is, by the way, a company they bought in February for $250 billion in stock, that the market is now valuing it probably well over $1.5 trillion. On
Bloomberg Television, on Bloomberg Radio, worldwide with us, Jim Chanos, thrilled he could join us today in this historic moment for his Wall Street and all of us around the world. So the short crew is at Tesla, somewhat like SpaceX, and I'm enjoying a 53% per year return since sort of the beginning of COVID, back 6 years or so. Again, Tesla's done better than good, and there's a modeled negative free cash flow right now. How long can the optimists of SpaceX keep this going without delivering a more conventional income statement?
Well, I think you answered the question, right? Years, if possible. But Tesla is trading at about 14 times revenues, right? It does have $100 billion in revenues, and it ramped revenues pretty quickly in 2019 and 2020. So there is a real business there in terms of large amounts of revenues and some cash flow. It's not trading at 110 times revenues. And that's a magnitude of difference, I think, that's really important for your viewers.
I've got, just for the first time, Scar, I've ever looked, the famed BQ function on the Bloomberg. And of course, Chanos nails the price to sales because he studied Tom Galvin years ago. I've got right now I've got a number of 27 times revenue on the BQ screen. It may be a little higher than that. I've never seen a stock like that.
So I'm glad you guys bring up Tesla, because there's this expectation that Tesla and SpaceX will somehow merge or will be combined in the same way that XAI and SpaceX got combined and merged. How are you thinking through that? What does that mean for investors who believe in the Tesla business but are maybe skeptical of SpaceX?
Well, again, if it happens, and I have no idea if it will happen or not.
Does Elon need to make it happen?
No, he doesn't need to make it happen. He can keep them separate if he wants. It's solely up to him. We all know that. But it would be an equity for equity deal. And so I don't know, how much value that would add in terms of cutting overhead is not the story here, right? It's really what these companies will produce in the next 5-10 years.
I look at this, Jim Chanos, as an historic moment. And the answer is to the cycles. And I opened up talking about Enron and all that. I want you to talk about the short business right now is a hugely important part of financial society in this great bull market we're in right now. There's a lot of scars out there. How do you keep that going when you see SpaceX right now? How do you keep a short model going with bull sectors and a bull trend in the broader market?
So through 2023, we were running outside money. Now we run our own money. We've been hedged in the short world since 1996. Basically, our view has been we don't know where the market's going, nor does anybody else. So we'd rather be long the market and short our collection of radioactive companies,
Right.
if you will. And that's been a very profitable business. And it's been a very profitable business for the last few years, too, despite the market hitting new highs, because there's been a lot of stocks, as you guys know, that have lagged
Right.
dramatically. So our view is always be long the market and be short some percentage of companies
Right.
with bad businesses. And I think that's nothing I would recommend your viewers to do at home, all right? I don't recommend short selling for most people. It's really for the pros for lots of reasons, things like getting an interest rebate on your shorts and a variety of other things. But I will say that one of the things right now that is very apparent is that insurance is cheap.
Right.
And it's cheap for all the reasons.
I don't want to interrupt because Scarlett wants to get 4 more questions in. Is SpaceX radioactive?
We'll have to see where it settles out. You can't short it right now anyway, so it's a moot question. I mean, I think that anything trading over 100 times revenues is of our interest. Historically, returns have been awful at those valuations.
You mentioned earlier the dot-com bubble. Are we doing dot-com bubble 2.0 right now?
Oh, this is much bigger. The AI build-out relative to the TMT build-out of 99, 2000 is multiples, even as a percent of the economy, GDP. And an important thing to point out is that when you get these CapEx booms in technology, they're tremendously accretive to earnings. And there's a simple accounting reason why. That is, when Tom buys chips for his data center from NVIDIA, NVIDIA recognizes that as revenue and profit. Mm-hmm. Tom capitalizes those expenses and writes them off over 5 to 10 years. And so you have a mismatch where the same dollar in a CapEx boom is recognized as profits by one entity and deferred by the same people expending the dollar. And that happened in 98, 99, 2000. From the middle of 98, S&P operating earnings rose 30% to the middle of 2000 over the 2 years. From the middle of 2000 to the middle of 2001, when order books got pulled, S&P earnings dropped 40%.
Was that too much accounting for a Friday? I think so.
I'll leave it. I'll stop at that.
Jim, let me ask you one last question before we let you go, because this is Bloomberg Money after all. How do you approach your own financial planning? How does it compare with how you advise or manage money for others?
Well, it's mostly in my business and in ancillary things, since I'm semi-retired right now, and I'm advising people, not directly running their money. So it's pretty conservative. So you set and forget, or you do make a lot of changes? It's mostly passive. Again, for most people, I think that's the way to go.
Jim, we got our merch over here. Scarlett's got her Knicks jacket here, ready to go.
Let's go Knicks. Knicks in 5.
She and Anne-Marie Horton are going to San Antonio. Why aren't we seeing you in the front row quickly here?
Well, first of all, I live in Bucks County, Tom, so I'm outside of Philly.
So you're doing a 76er.
Secondarily, my sons who were born in Manhattan are diehard Knicks fans, but I'm a Milwaukee Bucks fan. I'm a cheesehead.
I knew I was going to hear that. We just had to get that for the record as well.
Jim, thank you so much for joining us today. Really appreciate it.
Thank you so much for having me.
Jim Chanos, founder and president of Chanos & Company. Coming up on Bloomberg Money, we've got a conversation with the former U.S. Treasury Secretary, Jack Lew. Tom insisted on him coming on because there was a really scary headline this week on Social Security.
You're not going to get your check. That's the heart of it.
Don't say that. Don't say that out loud. All right, this is Bloomberg Money. I mean, I've pretty much concluded that I'm not going to get any Social Security.
Will you get your check?
No. I'll never be able to retire. Let's face it.
Welcome back to Bloomberg Money. I'm Tom Keene alongside Scarlett Fu, Good news. We'll keep you up to speed, I should say, on SpaceX now up $30.
Yeah, it opened at 150. Of course, the IPO price at 135 yesterday, and now at 165. Of course, we're looking at markets overall, and the stock market feels like a little bit of an afterthought compared to the excitement surrounding SpaceX. Although there was a headline that crossed from the Pakistani Prime Minister saying that an agreed-upon text of the U.S.-Iran peace deal has been reached.
It is an odd market. Both you and I saw that across broadcasting today. I mean, there's no other way to put it. On SpaceX, it's simple. Out we go at the assumed price. Up we go. Then there was a pause, I would say, in the last hour. And SpaceX now trying to get some new oxygen up at 165. Most important conversation I heard was from Isabelle Lee looking at all the retail expansion in the exchange-traded funds. I think that will be fascinating.
The single stock leveraged ETFs that all these issuers have launched. All right, we'll get into all that in a little bit. But of course, we want to stick with the stock of the hour, and that is SpaceX. The Bloomberg Money team writing the following. SpaceX IPO whips Musk fans into frenzy. The more, the better. One investor told our reporters, quote, "This feels like the appetizer. You have to believe in Elon. I'm willing to overpay for it just to say I'm part of the thing." Bloomberg Money editor Nikki Waller joins us now to discuss. So this has become experiential. It's not just about it, being part of your portfolio. It's just about being part of the experience and being a Musk fanboy.
Yeah, it's part of the conversation, right? This is an IPO we're going to be talking about at cocktail hour. And this is a place for Elon Musk's fans to show just how much they believe in him and his vision.
Is there a unified voice, retail voice on SpaceX? I mean, we quoted that person who said that they just need to get in there no matter what. But I wonder how much divergence there is within the voices out there.
There is no unified retail voice in SpaceX. I think one of the most interesting things about this, given who Elon Musk is and how strongly people feel about him, the sentiment, what people are talking about on Reddit, the places where people go to debate, it's really not about whether or not you like Elon. It's about, is this a good investment or not, which is a little bit heartening right now, that it's not a culture war. It's actually a value conversation.
What are the cases traders are saying are the, to buy the IPO versus not buying the IPO, especially for a retail investor?
I think for retail investors, there is the FOMO that we're talking about. You want to be in at the beginning, in on the ground floor. We saw a lot of people that we've talked to over the week who have sold other stocks to give themselves dry powder for this offering. On the other hand, there are people who are not bothered by not getting in at this stage, and they'll get in a little later, even if it is more expensive. And they say they believe that a lot of these people are Tesla investors. They're going to hold and believe that this will turn up value for them,
or it'll just end up in their portfolio because it's part of the S&P 500 after a year.
For the great many of us, yes. In a year from now, it'll be in our target date funds and elsewhere in the 401k if it performs as people hope.
All right, Nikki Waller, thank you so much. Bloomberg Money editor Nikki Waller. She is the person behind our Bloomberg Money efforts here at Bloomberg.
Building out each and every day. What we know is the news flow has been extraordinary. There's been things off the radar, but then things that hit home. The reports this week, the update on your Social Security, those older than you, their Social Security was sobering, to say the least. We get lucky. Jacob Lew is a former U.S. Treasury Secretary. His current shingle out at Columbia University is Professor of International and Public Affairs. But far more than that, a heritage to Massachusetts politics, working for Tip O'Neill ages ago on the 1983 Greenspan Commission. So what were you, a page, 15 years old, working? What was it like working on the Greenspan solution to Social Security?
Good to be with you, Tom and Scarlett. I was about 25 years old. It was, out of college, an early job, and I worked on Social Security really from the beginning of the time I worked for the Speaker through '83, so it was like 4 years, and the days were very challenging. Now we think we live in the most partisan days ever. Mm-hmm. The Reagan-O'Neill fights were pretty legendary, and the 1982 congressional campaign was fought out over Social Security in large part. Would you or would you not protect Social Security? We had leaders at the time who avoided poisoning all of the possible solutions as they went through their political battles. Right. And the Greenspan Commission Alan Greenspan played an important role, but it was really a cover for a negotiation between Reagan and O'Neill to figure out what could they agree on. And there were back-channel negotiations about what could we do on benefits, what could they do on revenues. And when it came to an end, it was a solution that here we are 50 years later talking about the fund running out. 50 years is a pretty good accomplishment.
14 years, let's go to the Brookings Institution right now. And Jack Lew front and center here, obviously through all his services as Secretary of the Treasury. Brookings, lessons learned from Simpson Bowles. 11 of the members said, yeah, let's do this, recommending that the federal government take dramatic action. That number was short of the supermajority. It didn't get done. They missed the 14 votes. Is that where we're heading again, to another Simpson Bowl, or with the leadership of Peter Orszag and others associated with the Republican Party? Can we get it done so she can get a Social Security check?
So look, the reality is the trustees' report that came out this week says that in 2032, Social Security will run short of paying the old age benefits fully. It would be a 22% benefit cut if nothing happens. You look combined at the old age, survivor, and disability trust funds, it's only 2 more years. 2034, it runs short. Having the idea of a 20 to 25% cut in benefits is unacceptable. Most people retiring rely on Social Security for most of their household income. It may not be true in the world that we live in, but for the majority of people retiring, they cannot afford to give up 10 or 20% of their Social Security check. The challenge is, how do you create a sense of urgency around this to deal with it so that you're not on the eve of the trust fund running out of money? Any solution that's really going to work requires some time to take effect. If you do things on the benefit side, even in a way that has a modest impact, long lead time is needed. If you do things on the revenue side, the same. You can't just say, tomorrow we're going to close the gap.
Right.
So it should be treated as an issue for today, not an issue for 2032. You put this in terms of the kind of presidential calendar. It means that before the end of the first term of the next president, something has to be done. Now, there's good work being done. There's a group at the Brookings Institution that put out a bipartisan proposal. It has a combination of tinkering with benefits and tinkering with revenues, doing things that are kind of on the model of the 1983 package. And it has an impressive number of former Republican and Democratic members of Congress endorsing it. I'm going to be speaking at a conference at Brookings at the end of the month, June 24th, where these issues are going to be discussed. I give you a lot of credit for starting the conversation here now.
It wasn't my idea. Scarlett said, I'm not getting a check. Get Jack Lew in here.
This is because as a Generation Xer, Gen Xer, I just naturally assumed growing up, yes, that Social Security would be insolvent by the time that I would need to draw upon it, that it wasn't going to be there. It's kind of a Ponzi scheme where I pay into it and nothing's going to come back to me. I just made my peace with that, and most members of my generation have too. Here's a really dumb question, Jack. Can't the government just print more money to put into Social Security to make the benefits whole?
First, on the financing, it never runs out of money because there's payroll taxes coming in on a current basis. It falls short, and the estimate is 22% short. So I think it's unacceptable to have a 22% benefit cut, but it not being there is something of a misunderstanding. And I think the challenge is, how do you drive the political process to talk about not having the unacceptable outcome of that across-the-board cut?
Can the government just print more money to make it whole?
Oh, listen to you.
Oh, I mean, this is a question that's out there.
We have issues that are fiscal challenges besides Social Security. We're running an enormous deficit. Our debt is growing. You know, I was OMB, Office of Management and Budget Director, for 3 years when we had a balanced budget and a surplus. Right. And we thought we were on a path towards paying back the debt. That's not where we are today. We're on a path where we have to worry, will the world support our borrowing needs in the years to come? So just printing money it adds to that problem.
Scott was going to segue to this in a bit, but Scarlett's taken over the show. Let's get to it now. Our debt and our deficit. None of us have ever seen this. This is what I say in interviews. It's what I say in speeches. What do we do after Trump? What is the behavior pattern of our fiscal policy and fiscal dialogue after this president of the United States?
I think this conversation about Social Security is going to be the first test. You know, it's the thing that's most pressing in terms of requiring immediate attention. And frankly, on neither side of the aisle do you hear leaders talking about taking the kinds of responsible fiscal policy steps to put our whole house in order. Ultimately, it will require a combination of difficult decisions that our history is are better taken on a bipartisan basis than not. That doesn't seem to be in the cards right now. I would say start with Social Security, fix Social Security. Everybody wants Social Security to be there, and build a little trust to move to the other conversations. What I worry about is, the legacy of the Trump administration is leaving very little resources to meet urgent needs. The burden of paying the debt is growing as a percentage of the budget. So whether you care about national defense or feeding hungry children, it's going to be harder and harder to pay the bills. So these issues are going to have to be addressed. We have to start somewhere.
You know, when we talk about the national deficit, the debt burden that's out there, a lot of people wonder how it connects to their finances, their livelihoods, their lived experience. Elected officials say you don't want to make it bigger and leave it to your kids and grandkids to shoulder that burden. But what does dealing with it actually look like? What kind of sacrifices would people need to accept making in order to reduce that deficit?
Yeah, look, the things that are driving the federal deficit are we spend more than we collect in revenue. It's not more complicated than that. We spend about 23% of GDP. We raise 15 to 70% of GDP. Revenues, when we balance the budget, were 21% of GDP. That's what Bowles-Simpson looked at as a target. We're going to have to talk about taxes. We can't talk exclusively about taxes. If you fix Social Security, in 1983, when we fixed Social Security, it actually helped the overall fiscal health of the country. We didn't do it to balance the budget, but when you make changes that bring more revenue in, and even in a modest way curtail spending, it helps. So I think there's going to have to be a conversation that's very hard on both sides.
I've got, with the time running out here, Jack Lew, I've got like 8 ways to go. I noticed SpaceX, we'll do it here in a moment, folks. SpaceX out to a new high right now. We'll get to that after Professor Lew. I want to go back to the core issue, and this is a Bloomberg issue and the fancy people we talk to. I went back, one of the greatest amount of hate mail I've ever gotten on a chart was explaining to people that the rich stopped paying their fair share of Social Security ages ago, is one of the linchpins of Social Security reform that the fancy people like me just simply have to put more in.
Yeah, look, the fact that we stopped paying Social Security payroll taxes when we keep on earning quite a lot of money beyond that is a relatively easy policy solution, which won't dramatically affect the standard of living of people who are in a fragile place. I think it's a little unfair to say that people don't pay their fair share. We have a progressive benefit structure where your Social Security benefit is a higher percentage of your prior wages and a better return on your payroll taxes than if you're at the high end. I think that's a positive feature. That's a feature, not a bug. I mean, we have a system that does modest redistribution where everybody's in it together. You think about the things that in our society are poverty programs and how they've fared in the last few years. Look at Medicaid, cut deeply. Look at SNAP, the food stamps program, cut deeply. There is no longer an AFDC program. It was replaced by TANF. So if you put things in the basket of poverty programs, they are much more vulnerable. I think to strengthen Social Security, we should all be in it together. And I think the right thing to do is to raise the earnings limit. But we also have to look at what you do on the benefit side in some ways, taking a long lead time, not doing anything dramatic.
Wonderful to see you. Look forward to seeing you again. Jack Lew with us, folks. Of course, the former Treasury Secretary of the United States, now at Columbia University. Coming up, it's become instantly popular, books. I have a book. Scarlett has a book. Elon has books.
Well, there are books that Elon likes reading. There are lots of books about Elon as well, so we can go in any number of ways.
He has one of my favorite books out there. I'll give you a hint. Mr. Isaacson is on the Elon Musk
there you
list. From New York City on this Friday, Bloomberg Money. Stay with us.
Yeah.
Welcome back. Bloomberg Money from New York City. Scarlett Fu and Tom Keene. Somewhat of a special edition. Yes, personal finance. We're doing retirement, Social Security today, and wealth management. I'm not out of triple leveraged all cash yet. I have not gone long on SpaceX.
You're not buying up the triple leveraged single stock ETF on SpaceX? All right, well, we'll see how that goes. But in the meantime, let's check in with Yahaira Anand. She is our Bloomberg Television correspondent joining us from the NASDAQ to give us an update here on what's going on with SpaceX. Yahaira.
Hi, Scarlett. Well, we are seeing shares trading just under $165, well above their $135 IPO pricing, giving SpaceX a market value of just over $2 trillion. That strong debut, though, isn't entirely surprising given the enormous demand we saw ahead of the offering from both the institutional side and retail investors, with the deal heavily oversubscribed. And now we are hearing the first reports of technical issues. Robinhood putting out a post on X saying that Robinhood saw record-breaking traffic today, and as a result, some customers experienced latency and intermittent issues. They're saying that essential systems have now recovered. But as I said, not a surprise given that we knew that the retail demand for this stock was going to be huge.
All right, Yahaira, thank you so much. Yahaira Anand over at the NASDAQ. We will be checking in with you throughout the trading day.
I'll make clear it's buttressed up here. So, SpaceX, I'm sorry, it lifts up, it churns a little bit, the tension's there, the sweat's there, but on first blush, congratulations to these bankers for getting the price right. It's an art. It just doesn't happen with Excel spreadsheets.
Well, the price is usually right on the first day of trading. It's a matter of whether the price is still right a week from now or 2 weeks from now or 2 months from now.
Huge feedback last week to our book section. What we're going to do today, just to spare it down, is to look at the books of the gentleman in the leather jacket at the New York Stock Exchange a bit ago, and that would be Elon Musk. I look at these, Scarlett. Why don't you run through the 3 books we've got right now?
It's a foundation series by Isaac Asimov. And apparently this is the book that he put in the red sports car that he shot into space. So he wanted this to be noted for posterity.
If you're of a certain vintage, you dream with Mr. Asimov.
It's a science fiction series. That's what Luigi tells me, our producer. Mm-hmm. And his favorite book, by the way, The Hitchhiker's Guide to the Galaxy by Douglas Adams. This really has a lot about formulating the right questions. And we know that Elon Musk is a big thinker type. So I think he said that this had a great influence on him during middle school.
And the 3rd book I just think is so important, folks, and poignant here with the death of the gentleman from Brown University, Gordon S. Wood. Gordon Wood was our definitive biographer of Benjamin Franklin. He is the one that brought him to life. And then Walter Isaacson exploded Benjamin Franklin even more into our consciousnness. You see it, there was the TV series that was out that was so good. Who
played Benjamin Franklin? Do you know?
I can't remember right now. You're the celebrity lodestone. You should.
It was kind of a trick question.
But the answer is it's a really important statement about America's first entrepreneur.
I like the way you put that. Yes.
That's where
Elon Musk appreciates the profile of Benjamin Franklin by Walter Isaacson. We know that Elon Musk admires Ben Franklin deeply for his journey from being an entrepreneur to being an inventor. And that's kind of how Elon Musk sees himself, along with, all the other hats that he wears.
Let us know here at Bloomberg Money your thoughts on books. I think one of the ways we go is just get 5 books from Scarlett would be a good angle.
Let's just do one a week. I don't know that I can read 5 at once.
Well, who says we have to read them? We can just talk about them. That's the way it is. I'm reading right now Vali Nasser on Iran, NASR. Francine Lacroix introduced me to him. It is the one volume on Iran.
All right, there you go with your unofficial recommendation. And remember to catch our newsletter that covers the world of books on books. We're going to give you the look ahead next. And I think the Knicks are definitely going to be there because Knicks in 5.
Oh, our On Books newsletter. It's in orange.
How appropriate.
How appropriate.
This is Bloomberg Money. See?
Nice merch. Bloomberg Money, good noon to you. Tom Keene and Scarlett Fu here. It's really a special edition. Shout out to our team for talk about rip up the script.
Oh,
Wednesday, we just blew it up.
Yep.
And I called up Elon. I said, can you make the trading I'm thinking 18 minutes ahead of time? And he and his team, they nailed it at SpaceX.
It's pretty incredible.
Out to a new high right now. We're up 26% off that. And you know what's amazing? Lisa Matteo and her kids on the couch in Robinhood, and their trades got through. The look ahead before she retires here this weekend with Bloomberg This Weekend. Lisa Matteo, what do you have?
I got the phone calls already. So I want to start out with what we're looking ahead to next week. Middle East, of course, definitely in focus. You have President Trump saying that the U.S. and Iran are possibly coming closer to a deal. You have sources telling Bloomberg. Yes, you have sources telling Bloomberg it could happen at the sidelines of the G7 summit. But now you have the Prime Minister of Pakistan coming out on social media and saying that the text, they have agreed to it. They've reached that.
Outside confirmation.
Exactly. He posted it on social media, and he's saying that, you know what, we're going to keep talking with them, and a deal could be reached. His quote saying, peace has never been as close as it is now. So you look at oil, you look at Brent, you look at WTI crude, they're both down more than 3%. So that's something we're going to be focused on into the weekend.
It's an important point to see Brent down 3%. I mean, with the oscillations this week.
Yeah, it absolutely has. And in fact, oil prices are set to close the week lower if we continue along this path. There's also quite a bit of data coming out, including on the consumer, which is what we're all concerned about.
Correct. Retail sales, we can't forget about that. And we also have the FOMC meeting talking about interest rates. So there's a new Bloomberg survey out today that shows that economists are feeling that rates are going to stay steady throughout 2026. We'll see. The question, though, is what is Kevin Warsh going to say? It's his first, press conference. So what exactly is he going to say? Bloomberg Intelligence says he's going to steer away from any kind of hinting or guidance as far as interest rates. But
party at Lisa's tomorrow night, Nick's. We don't have to. We can stay up and watch the whole game.
You're inviting yourself over to Lisa's place?
Yeah, party at Lisa's, and we don't have to go to sleep.
Tom doesn't care about the FOMC right now. What he cares about is the Knicks watch party at your house over the weekend.
Correct. I know, but I can't stay up late because we have Bloomberg.
That's right.
There you go. That's her built-in excuse.
Weekend torture.
The weekend. That's the one things we give away. But yes to the game Saturday. So you have to keep in mind for that. Here's the thing. If we do not win, and I don't want to put that out there.
Don't jinx us.
But I know I'm not going to jinx it, but there's a number going out there, and it's $263 million in economic activity. They're saying if it comes back to New York. So that's the big number that they're saying. But I say, forget the big number.
Let's just get
it in 5, and we can celebrate at the parade.
Yes, yes.
Do it that
I like
way.
your line of thinking. I like your line of thinking.
Another big event, can't forget World Cup 2 also happening today. We have the U.S. taking on Paraguay. That's tonight. And then this weekend, Saturday, you have the games coming to the New York, New Jersey area. So that's going to be Brazil and Morocco, and that's taking place on Saturday. If you're eating out, don't forget they're adding that 20% fee for service charges. Yes, because, tipping.
Lisa Matteo, thank you so much. Lisa Matteo of Bloomberg This Weekend. And be sure to catch Lisa as well as David Gura and Christina Ruffini every Saturday and Sunday morning starting at 7 a.m.